In order to understand price action concepts, market structure strategy with LuxAlgo, you have to understand market structure and know its basic fundamentals. And market structure is defined by a few things. The first aspect is trend. The second aspect is the pivot points or the turning points of the market. In an uptrend, price action has higher highs followed by higher lows. And as long as that continues, then you're in an uptrend. In consolidation, you'll see the market make equal highs and equal lows until it breaks out of that consolidation. And in a downtrend, you see the market make lower lows and lower highs. Now, for people who are looking to trade with the trend and a long market structure, the idea is that you want to buy at the higher low points and sell at the lower high points. That's what you're looking for when it comes to market structure. And the way that you determine market structure is just by following the points of the market. So, in turning points where you have the consolidation start to happen or a breakout of that consolidation, you know what's happening based off of where the highs and the lows are forming. All right, let's take the concept to the markets and show you how to really apply this in the live charts. Now, as you see, I'm using Great British Pound, Japanese Yen, but the main thing I want to insinuate is how the market is annotated by the LuxAlgo software. What it's doing is it's giving you points in the market where the pivot points are happening. So, for example, when I was very new to trading, this would be a very hard thing to do because I wouldn't know which points to pay attention to, how sensitive to make my points in the market, and then what to pay attention to when it came to placing a trade. Because the idea is on selling, you want to make those lower highs. On buying, you want to find those higher lows. So when it came to looking for those points, it became very tedious for me to mark up, identify, and strategize according to. So just having this gives you that clarity. And the way you have this set up is going to go to price action. I keep it very clean, especially for this strategy. So the main things I'm paying attention to is the market structure. So I like to have my internal on 7 and then leave the swing points on default, which is 50, and make sure that I have my show swing high low, show strong, weak high low. That's all I do. Everything else, there's other things like the order blocks and the fair value gaps, the liquidity concepts as a default setting, but I uncheck all of those. As you see, I don't have any of those checked. So there are great metrics for other strategies, but for this one, we're just focusing on that. So that's how I have it set up. So that's what makes my chart looks like that when it comes to price action concepts. So now I get to have an idea of where price is going. Now, the other aspect of how I set it up is with the LuxAlgo signals and overlay. So what I do here is I have my candle coloring. Right now I have everything for the most part turned off. So that way I have a really clean look. So what I'm looking for is just those higher lows and lower highs. That's it. Yes, the break of structures, the change of characters, they do matter. They give you more context in the market when you have a change of character going into a pivot point. But the main thing is the higher high is being followed by higher lows, and that higher low being your buying point, those lower lows followed by lower highs, and that lower high being your selling point. Now, what do I do to actually place a trade? It's the question everyone wants to know. You can do one of two things. You can have some secondary confirmations, like Fibonacci retracement, where you're looking for your pivot zone. So you have your 61.8, your 78.6. Usually I like to make that into a box and have that be an entry zone for me. Or we can make it even more simple than that. We can use LuxAlgo and now use the original software, the candle confirmations, for the signals. So what I do here is I turn my signal mode on and I want to put it on confirmation And I leave the signal sensitivity sometimes at 7, sometimes at 8, just to right fit the charts. I want it to be a little bit more sensitive because I'm not buying and selling just off the signals. I'm buying and selling because I have other confirmations that are going in my favor. So now with that being said, all I want to do is look for buys right after a higher low and sales close to a lower high. As long as I have that, I have pretty solid entry. Because when you have clarity, you have consistency. So right off the bat, just to show you some examples, this is a great example here, whether you did it at the candle close, and a nice little trade here. You know, if you're doing 1-to-1, you know, you have that win there. You know, if you're 1-to-1 bare minimum, you only have to be right a little more than 50% of the time. So if you're 51% accurate, you're profitable. But as you see, you know, these are uptrending moves. So here's another example. You have the market making a higher high, and then it made a higher low. Now it kind of did a little bit of small markups here with the lower high and higher low, but even still, the higher low is there. It's close to the signal point, and I can look at that trade. One way you can do it is you can have your stop loss be underneath the higher low that was given, and you know, you had your 1-to-1, and it went it up to a 2-to-1 here. If you really held it, could have possibly been a 3-to-1. Now, every trade, like I said, is not going to be the best trade. If you look here, it's going to be pretty hard to see. Let me see if I can make it a little bit wider. You have a lower low here, and then you had a signal. The good thing here is that if you were just taking the signals and overlay signals just off the signals, you would have gotten to this trade and you would have lost that trade. But because this was a lower low in this strategy, you wouldn't have took that trade. So you would have avoided a loss. Higher low, entry. So just to map it out, so you see here, stop loss is below the higher low. Shooting for at least a 1-to-1. I like to have a 1.5-to-1. So that makes my profit percentage to be accurate. So basically, I have to be around 40% accurate to be profitable. I'm fine with not being an accurate trader because I have good risk management. Now, strategies like this make you accurate. But what I'm saying is, if you don't have to be accurate to be profitable, then you're able to be more clear and concise because you know it's not the entry that's making your money, it's your risk management. Let's look at a different chart. Let me switch things around. You know, I haven't looked at. Here we go. We got Euro US dollar. Let's do that. Let's look at this one. Let's see if the same dynamics play out. We have a higher low. We have an entry. Now this one, the timing of it, I can tell was probably around Asia session. It was. Asia session started right after that signal. You know, you do want to trade in the sessions. The reason I know it was Asian session because of this consolidation right here. But even if you took it, just following the basic part of the plan, 1-to-1 was covered, 2-to-1 was covered, went to 3-to-1 before things came out. Now you could also use the exits as when to take your stop loss. I mean, when to take your take profit. But you don't have to always do it that way. See here, even though this would have been a good trade, it's a lower low. You would have to hold it. Most people cannot hold a 24, if they're intraday trading, cannot hold a 24-hour trade before they start to see progress. So their trade would have been here. You know, this isn't the plus. I wouldn't have took this trade because the lower low is way down here. That's a lot of risk here. So let me show you what that looks like. Low low is way down there. I got 62 pips of stop loss. So that means I need at least 62 pips. Now it took, let me show you how long did this take? Let's see. So this took, before I got to the one-to-one covered, this took 4 days and 5 hours. 53 bars just went over the weekend. That would have been tough to hold. That's hard. That's tough to hold, especially for the average trader. Here's a downtrending example. Now this one, you have to look at it closely. Trade is here. Stop loss is above the lower high. My one-to-one is covered, and it gets to 1.5 to 1. Reward to risk. Doesn't look great, but that impulse made the profit happen. Price did go down to that point. So trading can be very simple. I don't want to bore you with too many examples, but that's a very simple way to use LuxAlgo and use it effectively. So hopefully this helps, and I'll see you at the next video.